Good day, everyone. My name is Maydi Lumagaro, and you can call me Ate May. And welcome to Basic Finance. I'm going to discuss today three topics, which are forms of organizations, financial markets, and financial institution. As this is a finance subject, I am going to share with you the things I have invested. First of all is I invested in myself. In the future, we only have ourselves. That is why it is important to gain knowledge for the future. I've read books, watched educational videos, especially videos regarding stocks, for I want to know how I will let my money grow. For money is what makes the economy works. All thought money can buy happiness, but it buys our necessities in life. The topics I'm going to teach today will surely guide you in the future. Forms of organization. First is sole proprietorship. Sole proprietorship is the easiest type of business to run. It is when you capital a business yourself and operate it. Advantage of sole proprietorship is it will be easy for the owner to control and make decisions to the business. Will receive all the income generated and the easiest and least expensive form of owner to organize. If the owner wants to close the business, it will be easy as he controls everything. The advantage here is the fund of the business is limited. The business owner are legally liable for all debts owed to the business and have unlimited liability. Next one, guys, is partnership. Partnership is when you and the other entrepreneur will oversee the business. That means that you both will capital the business, operate the business, and share the profit. The entrepreneur must make legal agreement on how to share the profit and how decisions must be made. Advantages of partnership is while partnerships are relatively simple to form, time should be spent establishing the partnership agreement. The opportunity to raise funds can be enhanced. Complementary skills are normally beneficial to the business. The advantages here is that conflicts are possible when decisions are made together. Profit must be shared with others. Corporation is a legal institution that exists independently of its shareholders. Advantages here is shareholders can only be held accountable for their investment. Shareholders have limited liability and corporation can raise additional funds. Advantage is difficulty and expense of formation, government regulation and increased paperwork, conflict with corporation, double taxation. What is a financial market? The term financial market refers to a location where people engage in some kind of financial activity. A financial market is a marketplace where financial assets such as shares, bonds, derivatives, currencies, and other financial assets are created and traded. First one is physical asset. Physical assets are also called tangible or real asset market. Is goods in the economy. Real assets are intangible, which means they cannot be perceived or felt and do not have a visible appearance until a record representing the asset ownership interest exists. Examples are patents, stocks, bonds, and other markets are also known as a currency market, or the physical market is where commodities are exchanged for cash and distributed immediately. Example of this is buying stocks on the market. As you buy stocks, you immediately reflect on your account the stocks that you have bought. Next one is the future market. Future market in which participants agree today to buy or sell an asset at some future date. An example of this is a farmer who signed a contract with a middleman selling his wheat for the next harvest, which is the next 6 months. This means all the harvested wheat will be directly delivered to the middleman. Next is market. The financial market in which funds are borrowed or loaned for a short period, less than 1 year. Example of this is when you want to loan money for only 6 months just to buy a brand new cell phone. Money market, the financial market in which funds are borrowed or loaned for short periods. Example is the credit card, loaning to the bank that is less than 1 year. Capital market, the financial market for stocks and for intermediate or long-term debt, 1 year or longer. An example is when you buy a car and loan in the bank for 1 million and pay it annually for 10 years. Market in which corporations raise capital by issuing new securities. The primary market is buying rice from the farmer itself or selling new innovative products to the business. While secondary market in which securities and other financial assets are traded among investors after they have been issued by corporation. Market is buying rice from the farmer itself. Secondary market is buying rice from the grocery store. Private market in which transactions are worked out directly between two parties. Bank loan is considered private market, for these transactions are private. They may be structured in any manner to which the two parties agree. While public market is in which standardized contracts are traded on organized exchange. While common stock and corporate bonds are held by a large number of individuals, these securities must have fairly standardized contractual features because public investors do not generally have time and expertise to negotiate. Institution. Financial institutions, also known as banking institutions, are companies that act as a financial exchange intermediaries. The financial institution are investment bank, an organization that underwrites and distributes new investment securities and help business obtain financing. Bank, the traditional department store of finance service, a variety of savers and borrowers. Next one is Financial Service Corporation, a firm that offers a wide range of financial services including investment, banking, brokerage, insurance, and commercial banking. Money market funds, mutual funds that invest in short-term, low-risk securities and allow investors to write checks against their accounts. Pension funds, a retirement plan funded by corporations or government agencies for their workers and administered primarily by the trust department of commercial banks or by life insurance companies. Life insurance companies take savings in the form of annual premiums. About life insurance is an investment policy that you buy to cover your families from financial ramifications of your passing. Life insurance is intended to offset your earnings in the case of your death, and often people purchase enough coverage to pay off mortgage as a mortgage or to fund tuition costs for their children. It's important to learn these topics. As a future entrepreneur, you have to know the form of business you will build. It is important to know where you can invest your money and grow, and know where to loan money and different variation of securities. It is important to know the basic learning of finance, for it is where it starts your journey as a business owner, investor, and an individual in the economy. That is all. I hope you gain knowledge for today's lesson.